Hey everyone, Michael here. Hope you guys are all having a fantastic day today. Today I'm going to be teaching you guys how to use Fibonacci circles on your charts. There's three main ways I do it. I want you guys to learn each and every way because they all are very important. So before we begin, I want to tell you why you should be using Fibonacci circles. We all know that Fibonacci retracements are used to show us potential pivot points so we can buy the dip and make some profit. The problem with this is that we don't get an idea of when the price might come into contact with that specific Fibonacci retracement level. That is where Fibonacci circles come into play. They add the element of time into your charts, which can help you find when the pivot will actually occur, which leads to more profits for you, and who doesn't like more profit? All right, let's start off with technique number one for Fibonacci circles. In order to find Fibonacci circles and get access to them on your TradingView charts, go on the left-hand side of your screen, click the third tab from the top, and you should see Fib circles towards the bottom over here. If you guys feel like you might be using this tool a little bit more than normal, you guys could always give it a little gold star, and you'll see it actually opens up and takes it off from my favorites tab and puts it back on, so forth, okay? And so once you have that done, you can add it there or not, but once you have it clicked, you guys are also going to make sure you guys have the magnet clicked because you're going to be putting this down the exact way you do Fibonacci levels normally, okay? This is the first way, the easiest way. In this circumstance, let's go from the lows of 2020 during COVID, and let's go to the highs of 2021 to see if we could have used this to maybe find out this secondary rally and make some money off of this one, okay? So, find the low, find the high, and on this particular chart, the high was $64,898.55, all right? Now, just like with most Fibonacci levels, we're going to be using it after the fact, so we're not going to be using it back here, although you can see there were some levels of support and resistance in the past, which is very good. Now we have a pivot point with the time factor added onto it. And as you can see, as soon as we broke above this blue line right here, we started to really rip and have a good little, let's see how long this rally really took. We had a rally of about 80% for Bitcoin. Not too shabby there, okay? Now, you want to make sure that you're using it in certain market conditions. If you're going to be using it on the weekly charts or the daily charts, you want to be using it off of larger swings. If it's on a smaller swing, it's not going to be as accurate for predicting those mega swings that make you a lot of money if you guys are trading leverage, okay? But what you can also be doing on here and adding something else as well to help you guys out is you can also add the Fibonacci levels right here, okay? And you can see at this point in time, we didn't actually break down below the Fibonacci level here. We still managed to break out, and that was mostly because whales came in here to Bitcoin. We're used to that by now. But if you were able to time this up right around there, you buy at that point of contact, right up here, I guess the price would be around 37,000, you would have been able to make some really good profit. And then you can see as we kind of moved along further in time, it's become less and less relevant because we're going through it kind of sideways here. We're not seeing too much of a major pivot happening at this moment in time. And the reason for that is there's usually another Fibonacci circle that's explaining things a little bit better. And let me show you what I mean by that. So in this circumstance, we use the 2020 lows and the 2021 highs. Well, let me delete everything I just put down on the screen, and let's do the same thing, but this time, let's use the 2018 lows and the 2021 highs. And you can see what a difference this makes, which is why you guys are going to be testing this out so much. And this is still technique number one. But it is crucial that you guys understand that your first attempt may not be the most correct one, so you have to be careful and you have to practice it up a little bit, okay? And again, 2018 lows to 2021 highs. And guess what? Right here, we broke out above the blue one again, and boom, look at that. We had a nice little rally. In this particular circumstance, that rally would have been about 43%. So still a good amount of money here, and nice little move, but we have come down since then, and then you'd be looking at another Fibonacci support level or resistance level to kind of say, what's going on there? But you guys could always, again, add on that Fibonacci retracement level, and you can see, let me zoom in for you guys because I know this. Some of you guys may be watching on your phone. We never closed down below this level, which is fine. And then when we came up here, nice. But normally I'd be looking at the first one just because it showed that pivot point and the edge of the circle, the line of the circle, if you will, coming up very close together. And that's where you're going to most likely see some of the biggest moves there, okay? In this circumstance, maybe if I wanted to add something a little bit better, I could have done a Fibonacci retracement level here, looked for that pivot point right there, and then boom, we're off. Okay, but trial and error, test out a whole bunch of stuff. You have to be able to use multitudes of data at the same time. It can be complicated, but trust me, guys, give yourself some practice. All right. The second way you can use Fibonacci circles is in the other direction, in a bear market. I would be doing the bear market now, but something tells me we haven't found the bottom, and if we haven't found the bottom, it's going to be very, very hard for these lines to be accurate on you guys' screen, all right, or from on my chart particularly. So what we do now is the same thing as we did before. Click on the Fibonacci circles, but this time from going to low to high, extreme low to extreme high, we're going from extreme high to extreme low. And let's click on that right there. And now when you're looking at this one's really good if you're looking at reversals for coming out of a bear market, or at least looking at some bad things. Now, this is easier to do for a bear market because we are using the weekly chart and the daily charts. Those are what I stick to. If you guys are trying to find short-term swings, you guys could use these tools, let's say to about the hour chart, but I usually don't go down below a day, but you can in theory. So I'm going to give you guys the opportunity. I just don't day trade as much as I used to. I'm more of a swing trader. You guys know that. But there are opportunities there. Now, same thing occurs. You see this right here? We broke out of the blue right here, and then we started to ricochet up, looking very nice. And then what you could be using on top of this here, if you're looking for a pivot point, is we could be using the lows from 2015 or the lows from January, early 2015, if you say. And let me just go down to these lows because they were the lowest. Right there. We have a pivot point right there. It didn't actually time it pretty well with the blue line, which means I need to keep on testing some stuff out, but that's okay. Maybe it'd be more accurate here if I used the Fibonacci circle from all the way back here. I'm not going to do it now, but you guys can see pivot point. But once you break out above that blue, that's where it seemed like the pivot actually really started to accelerate there. And that's what everybody else kind of FOMOs at the last minute, like way up here. But if you buy around that point, you're looking okay, and you can have that stop loss there as well. And also, you guys are using all the information as far as, every time we have a bear market, we tend to come in contact with the 200 weekly moving average. You got to use all this stuff and put it together, because if you don't, it's just going to look like a bunch of lines on your screen, and you don't want to use these just as levels of support and resistance. They're more important than that because they add the factor of time to Fibonacci sequences. Okay. And the last way you guys can be using this method, this one's a little more complicated, so bear with me here. You guys are going to go over here and click on the square tool, or rectangle tool, rectangle tool. You're going to have the magnet on again, and what you're going to be doing is adding a square from an extreme high, or extreme low to an extreme high. You can do this on both, but Bitcoin usually goes up over time, so it's not going to be really that useful to us. And you see I did an extreme low to extreme high, just did a normal triangle. Now you guys should click on your triangle. You should see all these little bubble things on the edge of it for you to drag and move it around. Don't drag it. Just go to Control C, Control V, copy and paste the boy. And then up here, you're going to line these up like this. Okay? If you want to be very precise, you guys can zoom in. I'm okay with it being a little bit off here, but let me see if I can get it. Yeah, it's good enough. Good enough. And then what you can do here, and this is a little bit more if you want to spread it out for even a longer term theory, but you just don't have the information there. You're pretty much squaring the box, if you will, and you may see the box get a little bit smaller. This is not too noticeable on Bitcoin's chart, but that's just because I have log on my chart. If I just move my head out of the way very fast, log on. Okay. Now, what you do is you get the Fibonacci circle again. You click on the magnet, then you click off the magnet, and then you drag it all the way over here to this other corner. And just like that, you have a larger scale one. So in this circumstance, if we go back in time a little bit, because we would have this one from the highs of 2021, we had some support around here. We broke down below that, kind of got scary, talking about what happened before, of course. Found some support right here, found some support right here, broke down here, and it looks like our next level of support, according to this particular Fibonacci circle, there are many you guys could be looking at, looks to be around here about $23,000, maybe as far as 22, 21,000 if you were to take a really big move over the next 2 weeks here. But there you go. You want to make sure you can be able to plan this out a little bit better. And, as we're looking at it now, maybe this one isn't the best one to be using because we broke down below this. So maybe what I would do now is I would get rid of that first triangle. I would get magnet on again and move it over to the all-time highs here of $69,000. And then from there, same thing, copy, paste. Trial and error, guys. Trial and error is really going to help you out with this one. I wish it could be a really fast thing, but it's not. All right. Let's just move this back over here a little bit. There we go. Close enough. Now you want to drag this level way out here. That should be good enough. And see if there was any major difference that makes me more comfortable with this chart in particular. And there you go. On this example, we never actually closed down below this point. In the first week we did, oh boy, all hell broke loose, and then we came crashing down to this miserable mess that we are now, okay? So it's a nice pivot point coming down. According to this one, though, we'll find support sometime around $25,000. We may have a bounce around there before we actually come into contact with the 200 weekly moving average, okay? And then going back in time, of course, you could have used each one of these examples to buy. But this is why you guys have to make sure you keep on updating your information. If you update your information, you're going to be much better off as far as getting the freshest and most accurate levels of support, along with the most accurate levels of time when those pivots might actually occur. And you can see the time on this one worked out very, very well. Also going into the fact that we knew Bitcoin was going to crash on the channel because of the death cross between the 20 and the 50-week moving average. Every time that happens, we tend to have a bad time, right? Happened here, bad time. Happened here, bad time. And even if you go all the way back in here and back to the day of 2014, happened there, still a bad time, break above it, so forth. So everything kind of matches up historically here. Things can get choppy, but you still see breakout, riding support even through the crash in 2020, making a move up, getting some resistance there, getting some resistance here, resistance there, and so forth, okay? Hope you guys all enjoyed this tutorial. Please make sure to subscribe, and if you guys can, please watch the video again. You guys might need to watch this twice. I'm sorry, yeah. Have a good day, everybody.